What if I told you that the next AI gold rush isn't really about chatbots? It's about the machines behind them. Right now, hundreds of billions of dollars are moving into one thing: AI infrastructure. And Nvidia has teamed up with some of the biggest names on Wall Street to help mobilize more than $500 billion for AI infrastructure. But here's the interesting part. Where does all that money actually go? And more importantly, who gets paid when the AI boom gets bigger? Because the answer isn't just Nvidia, it's an entire money machine. Let's start with the headline number: $500 billion. Nvidia announced a partnership involving financial giants including Apollo, BlackRock, Blackstone, Brookfield, Goldman Sachs, and KKR. The goal: create financing platforms that can help fund massive AI computing infrastructure. Think about what that means. AI doesn't run on magic. It runs on chips, servers, networking equipment, data centers, electricity, and cooling systems. Every time AI gets smarter, the infrastructure bill gets bigger, and that's why the AI economy is becoming much bigger than just software. So let's follow the money. Imagine a company wants to build a giant AI data center. It needs thousands of powerful chips. Those chips need servers. Those servers need networking. The entire facility needs electricity. And then you need cooling systems to stop all of that hardware from overheating. So one AI project creates demand across an entire chain: chip manufacturers, data center operators, energy providers, construction companies, and finally, the AI companies using all of it. That's the real AI money machine. And sitting near the center of this machine is Nvidia. For years, Nvidia was known mainly for GPUs, but AI changed the game. Modern AI models require enormous amounts of computing power. That means companies need huge quantities of accelerated computing hardware. And Nvidia doesn't just sell a chip. Its ecosystem includes hardware, networking, software, and the technology stack that helps developers actually use that computing power. So when the AI industry expands, Nvidia can benefit from the infrastructure build-out itself. And now there's another layer: financing. Instead of every customer needing to fund massive infrastructure projects entirely on its own, financial institutions can help provide capital that can accelerate the entire cycle. Picture a traditional office building. Now forget everything about it. An AI data center is closer to a giant industrial machine: rows and rows of servers, thousands of processors, high-speed networking, massive electricity requirements, and enormous cooling systems. And the crazy part? The building itself isn't enough. You also need the power infrastructure to support it. That's why AI is increasingly becoming an infrastructure story. The software may be invisible, but the physical infrastructure is very real and extremely expensive. Here's where things get really interesting. Imagine an investor provides money to build AI infrastructure. That infrastructure contains expensive computing equipment. Companies then rent or use that computing capacity. The revenue generated from that computing can help support the infrastructure investment, so the money can move in a loop: capital to infrastructure to computing to revenue to more capital. That's the basic idea behind turning AI compute into something that can be financed like infrastructure. And this is why Wall Street is paying attention. Because if AI computing becomes a long-term economic asset, then it isn't just a technology story anymore, it's also a finance story. But here's the part nobody should ignore. Spending hundreds of billions doesn't automatically mean hundreds of billions in profits. AI infrastructure is incredibly expensive, and technology changes quickly. A data center built today needs to remain useful long enough to justify the capital invested in it. Investors therefore have to ask, will AI demand keep growing? Will companies actually make enough money from AI? Will computing capacity remain valuable? And what happens if AI spending slows down? These are very real questions, because when enormous amounts of capital enter one industry, the upside can be enormous. But so can the financial risk. So who actually wins from the AI money machine? It's not necessarily one company. The winners could include the companies building the chips, the companies building data centers, the companies providing electricity, the companies supplying networking equipment, the cloud providers renting computing power, and the financial institutions providing the capital. In other words, the AI boom is creating an entire ecosystem of businesses around one scarce resource, computing power, and that may be one of the most important economic stories of this decade. So the next time you hear someone say, AI is just another technology trend, remember what's happening underneath the surface. Billions are being spent building the physical infrastructure that AI needs to exist. And now Wall Street is helping finance that infrastructure at a scale that could exceed $500 billion in the latest Nvidia-led initiative. The big question isn't simply, will AI win? The bigger question is, who will make money building the machine that powers AI? Because the AI revolution isn't only happening on your screen, it's being built in warehouses, factories, data centers, and power systems around the world, and we're still very early.